Have you ever wondered why a three-digit number controls so much of your life? Your ability to rent an apartment, buy a car, get a loan, even get approved for a phone, all of it decided by a score that feels like it changes whenever it wants to. What's strange is how easily we accept these numbers as truth, even though most people don't know where they came from, who created them, or how they actually work. And the craziest part? The same government that created the environment for this system is over $34 trillion in debt, yet they judge you for how you handle yours. Before credit scores existed, the lending world looked completely different. Back in the early 1900s through the 1950s, banks didn't have algorithms or scoring models. Lending was based on reputation, neighborhood, race, gender, occupation, and whether the loan officer felt good about you. They literally kept secret files on people, and consumers had no right to see what was inside them. Decisions weren't based on data, they were based on personal judgment and bias. By the 1960s, this system had grown out of control. Credit reporting bureaus began forming, collecting whatever information they could find about people, creating profiles that followed them for years. But the information wasn't verified, wasn't accurate, and definitely wasn't fair. People were denied loans for reasons they had no ability to see or challenge. Then came 1970. The Fair Credit Reporting Act forced credit agencies to provide transparency, accuracy, and consumer rights. For the first time, Americans had the ability to view and dispute the information being used to judge them. But even after all of that, there still wasn't a real scoring system. Everything was still based on interpretation. That changed in 1989. A company called Fair Isaac Corporation, better known today as FICO, created the first standardized credit scoring model. Lenders loved it. Now they had a simple, efficient, data-driven method to predict whether someone would repay a loan. But here's what most people miss. The score wasn't designed to measure how good you are with money. It was designed to measure how predictable you are with debt. It wasn't evaluating your financial wisdom, it was evaluating your financial behavior. Now let's talk about how the system actually works. You've heard of payment history, the biggest factor, but what does it really measure? Not responsibility, not budgeting skills. It measures how consistently you pay lenders. The system rewards you for paying interest on time and punishes you when lenders can't make money from you. Next is utilization, how much of your available credit you use. Here's the interesting part. If you use too much of your credit, your score drops. But if you use too little, your score also drops. The system wants you to use debt, just not too much and not too little. Length of credit history matters too. If you close old accounts, even responsibly, you can be punished. Open too many new accounts too fast, you get punished again. Then there are inquiries. Shopping around for better interest rates can hurt your score, even though smart financial decisions should be rewarded. And finally, the mix of credit. The system literally rewards you for having multiple types of debt: credit cards, car loans, mortgages, personal loans. So when you add it all up, it becomes clear the credit score doesn't reward financial responsibility. It rewards consistent borrowing. If you pay cash for everything, your score suffers. If you avoid loans, your score suffers. If you close accounts you don't need, your score suffers. If you use your credit too much or too little, your score suffers. It's a system that punishes responsible behavior while rewarding predictable debt. Now let's address the huge contradiction in the room. We live in a country where the government is more than $34 trillion in debt. Trillions, with a T. They borrow money daily, spend money they don't have, raise their own credit limits when needed, and print more money whenever they choose. They never get denied a loan. They never receive a hard inquiry. Their score never drops. Meanwhile, a regular person can finance a $200 couch the wrong way and lose 20 points on their credit score. Think about that for a moment. The ruling system doesn't follow the same rules it expects its people to obey. But the unfairness goes deeper. Medical debt, something no one chooses, can haunt someone for years. One unexpected emergency can drop a person's score by 50 to 100 points. Rent, the biggest bill most people pay, doesn't help your credit unless you pay extra for a reporting service. Insurance payments don't help. Utility bills don't help. But one late payment on any of those can ruin your life financially. Then there's the issue of errors. One in every 5 credit reports contains false, outdated, or completely incorrect information, and the burden is on you to fix it. Even closed accounts paid off responsibly can hurt you. Collections stay on your report for years, even after you settle them. And the 3 major bureaus, Experian, Equifax, and TransUnion, don't sync with each other. You can have 3 different credit scores for the same person on the same day. Yet your entire financial future depends on those numbers. This creates a constant sense of pressure. People become afraid to check their score because they don't want to see bad news. Others avoid using their credit because they fear lowering it. Some stay in unhealthy financial situations because they're scared to disrupt their good score. A tool that was supposed to empower consumers has instead created anxiety, confusion, and dependence. Think about how strange this is. A system designed to measure responsibility has trained people to be afraid of making financial decisions. If the credit scoring system truly wanted people to be debt-free, why is it built entirely around debt behavior? Why does it reward owing money and punish not needing it? And more importantly, who benefits from this structure? Lenders profit from interest, fees, penalties, and predictable borrowing cycles. Banks profit when you remain in debt, not when you escape it. So here's the real question. Is the credit score truly about responsibility, or is it about compliance? Is it about empowering people or controlling them through financial metrics? And if the government doesn't follow the same rules it forces on its citizens, what does that say about the legitimacy of the system itself? Really makes you think.